Okay, it's EZG cards, and today we are going to talk about timing the market for trading cards. So, first off, why is it possible to time the Magic and Pokemon market? You know, most economists believe the markets are efficient. There are concepts like the invisible hand and the efficient market theory for the stock market. So, there's slogans like timing the market beats timing the market. But all of that hinges on the fact that in the stock market, basically everyone is buying and selling to make money. In card games, there's this third category of buyers called consumers. These are basically collectors and players of the game that don't buy based on profit, but because they want the product for whatever reason. In a card game market, if there are not enough consumers and it's all investors, then it is basically a Ponzi scheme. Because at the end of the day, it's just investors shipping cardboard boxes around the country and playing hot potato. No one actually wants the product, they want the money, and that's bad. You don't want to be investing in games like that. A perfect example is MetaZoo. You know, 90% of the spending in that market was by people trying to get rich. The first couple sets did good cause of investor demand. And then the company overprints and overspends to get Hello Kitty IP, but there's no consumer demand. And the product and the company goes to zero. Now, how do consumers spend their money? That's a question as an investor of shiny cardboard squares you need to answer because you want most of your sales to go to consumers, not investors. Remember, the more investors are buying the product, the more likely that there's a Ponzi scheme going on. So, how do you convince consumers to spend their money? And the answer is very simple. If consumers have money, see the product available, and they want the product, then they buy it. So, there are three conditions. Now, two of the three conditions are completely out of your control. Whether consumers have money is based on the economy, and whether they want the product is based on how well the game is made and marketed. But as an investor, you control whether the product is available because you decide when to list it on eBay. So the way to time the market is you basically list the product at a price so that if it sells, you make your targeted return. Because the amount of supply and demand is constantly changing day to day, eventually someone will buy the product because on one day or 1 hour, you're the best option. Demand randomly spikes, or the big stores are holding back supply for whatever reason. You're basically playing the variance of the market to your advantage. So let's look a real world example with real numbers. Surging Sparks booster boxes. You can see that the booster box price over the past year has fluctuated like crazy. In 1 year, you have highs of 310 and lows of 210. That's a big spread. So let's look at the scenarios in the table. If you are Nostradamus and bought at the bottom and sold at the top, you're making $43 a box for around 21% return. If you bought at the top and panic sold, you're losing $134 per box. And if you held for 1 year, it's basically dead money after fees and shipping. You're losing $37 if you sell today after fees and shipping. In the long term, owning these boxes could still be good, but it's just very capital inefficient. It's dead money, and dead money is no bueno. Now, let's look at the strategy of buying and immediately listing at a price where you get your target gain after fees and shipping. Basically, throughout the past year, I've bought 23 Surging Sparks booster box and sold 19 of them. You can see in each of the trades I've made, basically I'm making 11 to 17% per sale. You know, there's some variance. But the key thing is, I'm only holding these boxes for 1 to 2 months, so my capital is only deployed for short periods. When that capital is returned to me after a small profit, I can do other things with it. Basically, you buy some boxes when it's cheap and you sell whenever someone is willing to buy. That's the strategy. Across Magic and Pokemon, there's basically endless opportunity. The true question is, do you have enough money to take advantage of these opportunities that only exist for a small period of time? On an annualized basis, my IRR on Surging Sparks transactions is 207%, but the market price is basically flat across 1 year. And that's why timing the market is better than time in the market. Okay, that's it for today. Like, comment, and subscribe for more Cardboard Squares investment secrets, strategies, and commentary.